Feroze Azeez is Deputy CEO at Anand Rathi Wealth, joins us with his thoughts on the market in general. Feroze, lovely to have you in the show. Thank you very much for your time. I do want to very quickly touch upon the attractive valuations that you see in Indian small caps. We just had a guest earlier on from Amundi, who's the CIO of Amundi, which is a French-based asset manager, who essentially said that he believes small caps in India are looking hot.
Yes, good morning, Tanvi. Nice to be on your show. You're absolutely right. If you look at the small cap index, the mutual fund industry tracks the index because small cap has several indices. So Nifty Small Cap 250 is the index which has the largest following. So in that case, if you look at it, it's about 15,000 as per price, and in terms of earnings, it's close to about 700. So that's about 21, 22 P. And the earnings this year has been about 30% growth in the earnings. Next year also we expect about 14-15% earnings growth. That's point one. So valuations are reasonable. Earnings growth has been stable. Liquidity, which comes from both the sides, the domestic side and the foreign inflow. On the domestic side, these 250 stocks have got large inflows because the mutual fund industry in the small cap category has got about 500 million consistently for the last 6-7 months, and even our estimates for February mid-month are almost about 300 million has come. Because these stocks have a lower free float, their buoyancy is high with small levels of liquidity. That's point three. Point four, in our opinion, what's going to happen is the MSCI small cap index has 200 more stocks than the domestic guys who track about 250 stocks. MSCI stocks are about 450. The other 200 have got a lot of FII inflow, and that's what has kept them at elevated valuation. So if you look at these 250 stock index, you see dispersion in terms of valuation. But we believe if you look at the total index, the valuation seems reasonable, liquidity seems great, earnings growth seems favorable, and the continued liquidity also seems promising.
What do you like among the small caps? Because it's an under-researched sector, so people, from the outside would be a little wary of dipping their toes.
See, what has happened is small cap as a word remains small cap over the years. But in India, there has been a paradigm shift in how small cap actually, in terms of size, look today. If you look at the largest small cap in the small cap index, it's about 60,000 crore Indian rupees, which is a lot of money in terms of market cap. So what has happened is the smallest small cap in stock is about 500 million, and then you have a large small cap as well. So coming back to what do we see in terms of under-research, I think the research has broadened in India because we are the largest number of listed stocks in the world. And I think the brokerages have started covering a lot more stocks than they would over the last 5 years because of the total change in the market class. So point one I'm making is on this topic, is that research has deepened, point one. Point two, you're able to spot several businesses which are potential mid-caps and large caps in India because in an economy which is going to go nominal 11-12%, I think spotting businesses which can consistently grow at 20% is not an outrageous ask.
Can I just ask you, because you mentioned that the incredibly tight floats for a lot of these companies, and you see all of these anecdotal or otherwise stories regarding all of these influences in India and directing people to day trade and to gamble, to play the derivatives. How do you ascertain whether or not a company is catching a bid because of accurate price discovery in terms of what you're looking for, or it's just, the beneficiary of a massive gamma squeeze? So how do you differentiate and then make your decisions? Because you might miss the boat, but at the same time, you might be trying to, chase something that's to the moon and then to the pits of hell.
Yes, well, very valid concern, and I think you're asking a brilliant question from a perspective of a retail investor or even an individual SNI investor. How we look at it, and the barometer for that is institutional holding. The institutional holding is not going to be increasing on hear or say, and social media is not going to be able to influence that. So if you look at several stocks, the number of FII additions in terms of their ownership could be a great barometer. Second, in terms of proportions. Third, in terms of are there new fund managers who are adding that stock? If you can probably put these three hygiene checks on a story which you believe, and you're not trying to buy a business just because there's a liquidity glut from the Indian retail, which is a large number. So point I'm trying to make is if you look at businesses, there are about 100 FIIs who currently own, and if you look at them 1 year back, there were just 20 of them. So I think the change in the number of FIIs, institutions, and the percentage holding and reduction in promoter holding should not be there. The last point should not be a negative point. So these are the hygiene items we look at.
Okay. Feroze, we are always squeezed for time in our conversation with you. Time is finite. So very quickly roll up two questions into one, which is one is on the GST collections month on month. They're really increasing. GST is falling in place in terms of implementation. So how much of that is really a leg up and a force to push growth higher? And secondly, expectations of an RBI rate cut. When can we expect the RBI to blink in India?
So I think point one, yes, the GST collections have grown about 11.4% the first 10 months relative to the same period for the last year, which is a great sign. I think that's a great barometer to the economic activity. But I think the more important bit is the direct tax collection has seen about 19% growth for the first 9 months and on a back of 21% growth. So tax buoyancy is great. We've penetrated 56% into our fiscal deficit in the first 9 months. The historical average is 87. So fiscal prudence has been right on the priority of the government, which implies that RBI rate cut could be possible in the first quarter of the next fiscal.
Feroze, we're going to have to leave it there. Thank you so much for your time. Really do appreciate it, as always. That was Feroze Azeez of Anand Rathi Wealth.